Hello, my name is Angus Murray. I'm going to give you a 3-minute overview of our equity high yield and premium income fund. The portfolio is intended to hold a diversified portfolio of listed, exchange-traded, developed market equities. Those equities we think are going to be some of the best performing over a period of 4 to 8 years, and they have the following characteristics. They are semi-monopolistic, they are price inelastic, they have strong balance sheets, and they have dividend yields of between 4 to 6% on an annualised basis. The type of companies, therefore, that we are talking about are Sydney Airport, AstraZeneca, and Singapore Telecom. So the fund in itself is long only. It doesn't use any leverage in terms of exposure for investors. The portfolio is completely transparent. It is daily traded, and the underlying instruments inside the portfolio are obviously completely liquid. To enhance the returns of the fund, the portfolio we hold, we write a covered call option against those particular equities, and that generates an additional premium income of between 8 and 12%. Here is an overview with regard to the portfolio, diversified by country, by holdings, by sector, the net dividend yields that we receive after withholding tax, and the premium income that we are able to achieve on an annualized basis. This is again the breakdown by sector and by country. This is the performance of the portfolio. You can see that since January 2012, the portfolio has underperformed the S&P 500. It would, not only because the S&P has had such a good performance, but also because this portfolio does not hold stocks such as those in the technology sector. But when you add in the dividend yield and the premium income, you get that outperformance. Here is the gross dividends by country. Obviously, that is reduced by the withholding tax if it is payable in the individual countries. This is the investment approach that we have. One of the most key things that I look at is the stated dividend policy of the individual companies, so we know what the projected, or a good idea of the projected dividend yields are going to be going forward. An example of a option that we have written over Commonwealth Bank and the premium income that we were able to achieve from that and the annualized return of that premium income. 2 screen grabs from Bloomberg with regard to that. I've also given 2 screen grabs from Deutsche Telekom for the same example, and that is discussed in the more lengthy presentation of around 10 to 12 minutes. So in conclusion, we are looking at a long only, unleveraged portfolio that is completely transparent and simple to understand. It holds stocks that we think are very good in terms of being semi-monopolistic, price inelastic, and strong balance sheets. So there's a predictability behind the dividend yield, which we expect to be on an annualized basis of 4 to 6%. And then by selling a covered call option against the holdings that we have, we expect to be able to generate an additional 8 to 12% in premium income. If you need further information, by all means, please give us a call and we'd be happy to discuss it with you.